Time now for an in-depth look at the market action. Today, we're joined on the line by Mr. Daniel Yu, Global Strategist at Yuanta Securities. Mr. Yu, thank you for joining us today.
Good afternoon.
Well, first of all, let's start with the U.S. The new Fed chair will be named. The word on Wall Street is that it could be the more dovish Lael Brainard, not Powell. How would this impact the markets?
Right. As you know, the Fed Chair Jerome Powell is expected to take the position continuously, but there has been some issues that there may be a chance that the Fed Governor Lael Brainard might take his place. Quite a lot of the policy strategists said that it is more likely that Powell will take the post, but if the Brainard is chosen by the President Joe Biden, then the market could see her as more dovish. Biden has actually interviewed both people, and he will make a decision quite quickly, we think. But in any case, this is market positive, either whether Powell continues to be the chair or the Brainard becomes the chair. The reason for that is because the monetary policy will remain to be quite eased. If you look at the interest rate environment, 10-year bond rates are not rising that rapidly, despite the huge amount of the inflationary pressure. And we see that the interest rates remain at below 1.6% for the 10-year government bond rate. Fed interest rate is still continue to be at 0 to 0.25%. The tapering will start this month and probably end by sometime first half of next year. And a lot of people are concerned that the interest rate hike might happen in July earliest. But if either Powell continues to be the governor or the Brainard becomes the chair, we will see interest rate rising trend would be very, very slow. If that's the case, then we think that a lot of the growth stocks relative to the low interest rate environment will continue to do well. So this is definitely positive news, whether or not the Brainard becomes the new chair or not.
Well, there are possible concerns of the pandemic and inflation weighing down the economic recovery. The key U.S. indices did not have a stellar performance. What's the story in the global markets?
Right. If you look at the U.S. stocks, it cut early session losses to the closing higher on Thursday, as the strong earnings numbers were basically outweighing the inflationary concerns. Both S&P and NASDAQ closed at record high level, fueled by gains in technology and retailers' shares. Right now, if the movement for the market seems to be following what we saw in the dot-com bubble era of 1998 to 2000, well, in any case, if you look at the share price movement, the chip maker NVIDIA was up more than 8%. Macy was surged by 21.1% because the earnings continues to be very strong, sales numbers robust, and we think the economic recovery is coming through. However, though, Dow Jones shows some decline because of the Cisco numbers were coming in much weaker than expected. In any case, looking into the futures market, we seem to see continuation of interest towards the growth stock, particularly technology stock, including DRAM or semiconductor businesses. So all in all, we think that the trend for the low interest rate environment related stocks, technology stocks or growth stocks, the interest will continue to be strong, and we think that that trend should be here to stay.
Now, turning to the local stock market, the tech-heavy bourse inched with some foreign buying. Select items in the KOSPI show positive numbers as well. Do share with us your analysis.
Right. If you look at Korean market, it has been quite decoupling from U.S. market. Korea continues to be at a very low level since the beginning of this year. At the beginning of the year, it did go up quite nicely, above 10%, moving up from the beginning of the year. However, it has declined quite significantly from the peak. It remains to be below 3,000 KOSPI territories. But recently, we are seeing foreign investors coming back to the market, and KOSPI was up by 0.8%, and KOSDAQ was up by 0.9% or so. Main reason for that is, once again, foreign investors are net buyer of the market, and institutional investors are coming back to the market as well. It seems that the retailers are the one only selling to this market. Now, also, if you look at the currency movement-wise, Korean won has not been appreciating that much, or rather, it has been depreciating. That was the main reason for Korean market to be very volatile and decoupling from U.S. However, looking into the future, we do think that U.S. Dollar rate would probably remain stabilized in the future, and that the Korean won should gradually appreciate on the basis of fundamentally strong numbers. So we do think the Korean market has more room to further rise, but I guess the tax-related issue about capital gains till the end of the year might remain to be so. However, though, because of strong earnings and that kind of selling pressure will end by the end of the year, and therefore next year first quarter should be the quite good quarter, we think, in the future. We do think that KOSPI's fundamental fair prices would be well above 3,500 territories. Right now, it remains to be right around 3,000 KOSPI number.
As for the Korean won, it started stronger against the dollar at the beginning of the day. The U.S. 10-year Treasury yield turns lower. Could you fill us in on the key contributing factors and what we can expect moving forward?
Right. Once again, as I told you, $1 rates are kind of weak in that it has hit 1180 plus level. We do need to see that number coming down, and appreciation of anywhere between 3 to 5% over the next 1 year would be positive news. Also, we do need to see continuation of low interest rate environment in terms of the government bond rate. You said that U.S. government bond rates remain to be at 1.5% level, and we think that this will gradually go up, but the speed will not be that fast. If that's the case, the Korea's interest rate will remain to be gradually rising rather than aggressively rising, despite the BOK might be raising interest rate. Quite a lot of uncertainty still remains. However, if the won appreciation does happen in the future and that interest rate rising trend is slower pace than expected, then that means that Korean economy as well as Korean equity market will do better in the future. We do think that, though, interest rate environment will be gradually going up because of the inflationary pressure still remains to be very strong globally. So we think that U.S. government bond rate will hit the 2% probably by end of next year, and then it might go up even further to 2.5% on the year after.
All right, Mr. Danny, thank you for your insights today. We appreciate it.
Thank you very much.